Some companies like their passive income as much as we do. These royalty companies offer a solid investment opportunity, usually with good dividends and sometimes growth too. Today, we will get our royal on as we look at royalty companies, and we'll begin right now. A royalty is an ownership in a portion of asset that allows another company to use said asset for a particular amount of remuneration. For example, if I owned a brand and another company wanted to use my brand, we could set up a royalty where they could use my brand in exchange for 5% of all their profits under that brand name. From my perspective, this is pure passive income. Some companies will acquire brands or assets for the sole purpose of profiting off of those royalties. Before we get to those royalty companies, let me know in the comments if you already invest in any royalty companies. Also, if you are brand new or just haven't subscribed yet to the channel, please do that so I can keep bringing you more financial content. It's totally free and it helps me a ton. We are going to present a few of these royalty companies for you guys to take a look at and maybe add them to your radar for some future due diligence. These companies are all Canadian and are all available on Wealthsimple, the community's favorite commission-free broker. Link below. And we start today's list with Sandstorm Gold Limited, who has a ticker of SSL. They are a gold-focused royalty company based out of Vancouver. They are in the business of acquiring royalties in gold mining operations. They have royalties in North and South America, as well as Asia, Africa, and Australia. They have a market cap of $1.57 billion, and their beta sits at 0.98, so they are relatively average in terms of volatility. If we look at their dividends, they have a yield of 1.05% that is paid out quarterly in the amount of 2 cents per share. In terms of growth, their growth in 2021 saw their share fall from $8.74 to $7.88 for a return on investment of negative 10.9%. In 2022, they have not fared much better, with another further drop in their price down to $7.62, meaning a return on investment this year of negative 3.4%. Even if we add in the dividend, this is a company in the red. Their total return is coming in at negative 2.35% for this year. Now, they did peak back in the summer of 2020, going up to a $13 per share price. So they had a flicker of potential, but this is not a company that I would be willing to bet on. In all honesty, they made the list so we could have a bottom. Up next, we have Labrador Iron Ore Royalty Corp. with a ticker of LIF. They are a royalty-based company based out of Toronto. They own the royalties for the Iron Ore Company of Canada, which operates out of Newfoundland. They have a market cap of $1.81 billion, and their beta sits at 1.32, so they are a wee bit more volatile than the market average. If we look at their dividends, they have a yield of 12.721% that is paid out quarterly in the amount of 90 cents per share. This dividend does change a lot, but for the most part, it tends to be on the higher side. In March, it was as low as I think I've ever seen it at 50 cents per share, so for our calculations, we will just use a flat 10% yield. In terms of growth, their growth in 2021 saw their share rise from $31.67 to $36.42 for a return on investment of 15%. That's not too shabby. However, in 2022, they did falter a wee bit, and their share price dropped down to $28.30, meaning a return of investment of negative 28.7%. Holy banana bread. With the dividend added in, we are still in the red, with a total return of negative 18.7%. This is a stock that can be very profitable in a bull market. So far, the bear market has not been kind to them, so this is one to watch, but maybe exercise extreme caution for any short-term plays. And now we have A&W Royalties Income Fund with a ticker of AW.UN. They are a royalty company based out of British Columbia. They own the royalties for A&W in Canada, and they franchise the brand right across the country with more than 850 restaurants. I now have a craving for A&W root beer, and I don't know why. They have a market cap of $591 million, and their beta sits at 1.16, so they are pretty close to the market average in, of course, terms of volatility. If we look at their dividends, they have a yield of 4.801% that is paid out monthly in the amount of 15.5 cents per share. In terms of growth, their growth in 2021 saw their share rise from $32.55 to $39.88, for a return on investment of 22.5%. In 2022, they have slipped a little, with their share price dropping to $38.74, meaning a return of investment of negative 2.9%. With a dividend added in, we are still in the black with a total return of 1.9% for this year. A&W is a company that is a staple in the Canadian fast food industry, so I do not feel there's a lot of risk with this company. They may struggle a wee bit in the bear market, but sunny days will return for A&W. This takes us to Diversified Royalty Corp, who has a ticker of DIV. They are a multi-royalty company based out of Vancouver. They hold royalties for Air Miles, Mr. Lube, Sutton Group, and a few others. They have a well-diversified set of royalties for sure. They have a market cap of $336 million, and their beta sits at 1.70, so they are definitely more volatile than the market average. If we look at their dividends, they have a yield of 8.117% that is paid out monthly in the amount of 1.8 cents per share. In terms of growth, their growth in 2021 saw their share rise from $2.31 to $2.86 for a return on investment of 23.8%. In 2022, they have not fared as good, with their share dropping to $2.71, meaning a return of investment of negative 5.5%. With the dividend added in, we are still in the black with a total return of 2.62%. This is a smaller stock, but I do like them as a passive income play. They have been very reliable with their payout in the last 5 years. This is not a stock I have any growth expectations with, but any growth is simply icing on their dividends. And now we have Pizza Royalty Corp with a ticker of PZA. They are a royalty company based out of Toronto. They own the royalties for Pizza, and they franchise the brand coast to coast with more than 600 restaurants. They have a market cap of $332 million, and their beta sits at 1.12, so they are not too far off the market average in terms of volatility. If we look at their dividends, they have a yield of 6.004% that is paid out monthly in the amount of 6.8 cents per share. In terms of growth, their growth in 2021 saw their share rise from $9.05 to $12.12 for a return on investment of 33.9%. In 2022, they have continued to fare well, with their share price growing to $13.49, meaning a return on investment this year of 11.3%. With the dividend added in, we are way in the black with a total return of 17.3%. This is a stock that I already know many of you have and love. I think I am beginning to understand why, as this one is definitely worthy of some further due diligence for sure. And that brings us to SIR Royalty Income Fund with a ticker of SRU.UN. They are a royalty company based out of Burlington, Ontario. They own the royalties for a lot of great restaurants, including Jack Astor's Bar and Grill, Scatabush, and Canyon Creek Chop House. They have a market cap of $115 million, and their beta sits at 3.05, so they come with a good amount of volatility. If we look at their dividends, they have a yield of 7.826% that is paid out monthly in the amount of 9 cents per share. In July, they also paid out a special distribution of 13.5 cents per share, which is a fantastic reflection on how this company is faring in the bear market. In terms of growth, their growth in 2021 saw their share rise from $3.05 to $11.63 for a return on investment of 281.3%. Holy banana bread. In 2022, they've continued to fare well, with their share price growing to $13.80, meaning a return of investment of 18.7% so far this year. With the dividend added in, we are way in the black with a total return of 26.5%. And you know what? If we add in that special distribution, then we have a total return this year of 27.8%. This is fantastic. And it's actually amazing that there's still one more stock with a higher return. How can that be? This is just a great little stock with very nice dividends and solid growth without being in the oil and gas sector. This is, in my opinion, absolutely one worth watching. Remember, of course, do your due diligence. And now, in our top spot, we have Freehold Royalties with a ticker of FRU. They are a royalty company based out of Calgary. They own the royalties for the, you probably have guessed it, oil and gas sector. They hold the royalties for companies on both sides of the border, though most of their royalty income comes from their Western Canadian holdings. They have a market cap of $2.19 billion, and their beta sits at 2.29, so they come with a good amount of volatility. If we look at their dividends, they have a yield of 6.612% that is paid out monthly in the amount of 8 cents per share. In terms of growth, their growth in 2021 saw their share rise from $5.18 to $11.81 for a return on investment of 128%. In 2022, they have continued to fare well, with their share price growing to $14.52, meaning a return on investment of 22.9%. With the dividend added in, we're in the top spot with a total return of 29.5%. This is a stock connected to oil and gas, and as a result, they have done well with the oil boom. Will they continue to do well as oil slumps? Hard to tell. So far, they have done pretty good, so this is definitely one to perhaps throw some due diligence at. Speaking of oil and gas, you should check out my video on the oil and gas sector, or you can try the video YouTube thinks you will like more. You can decide who's right, and I'll see you in the next video.